Yo, what's going on, brothers? Welcome back to Brotherhood Finance. Legendary investor Ray Dalio. His outlook, what is he seeing for current market conditions, and what is his future outlook overall for the stock market and the economy in general? We're going to be going over 6 indicators that he uses to measure if we are currently in bubble market conditions. I hope you find massive value in this video as always. Thank you for being a part of the Brotherhood. Thank you for 2K subscribers. It is a massive goal, and I can't wait to see how much further this channel grows and continues to progress over time. Much love as always. If you have any comments, questions, or anything like that, leave them down below. Make sure to smash the thumbs up button as always and subscribe to our YouTube channel. And if you had not had the opportunity, check us out at brotherhoodfinance.com. Furthermore, let's dive into what the legendary investor sees, the current portfolio that we put together in presentation, and let's dive into this instantly, brothers. All right, so obviously what we do know is Ray Dalio is a very well-known entrepreneur, and like I said, he's good at being able to tell what current market conditions we're in. He's one of the head firm managers of a company called Bridgewater, where he manages a ton of assets under allocation. And if we see here, like I said, he's very good at being able to tell what typical market cycles we are in. So, if there's optimism or fear or anything like that. So we're going to be diving into his current outlook. So again, his 6 signs of a market bubble. So sign number 1 is, are prices high relative to traditional measures? So one way we can look at this, and we can dive into all this, is by looking at the PE ratio, so the price to earnings ratio. Just like how normally when I go through stocks, I look at the price to earnings ratio to see if they are currently overvalued or not. And something you'll notice here is the S&P 500 PE ratio is substantially high right now, and it's averaging out about 45.33. So that's not included with the growth. So with the growth included, that's about a 2.2%. And then if you add that, it's about a 4.2% return, not included in the equation. So it's not, terrible market conditions. However, there is some asset valuations that are overpriced. So you have to, look at what assets you're investing in. And that's why I always say it's important to be able to look at balance sheets, look at liquidity, look at cash on hand and revenues, and be able to invest in companies and businesses and know why you're investing in them. So if we look, stocks have had about a 4.2% yield, and bonds have had about a 1.5% yield overall in these current market conditions. And what Ray Dalio is saying right here, current conditions compared to previous bubbles, is prices are high relative to traditional measures. So far, somewhat in market conditions, it's looking like it's somewhat frothy. And today's emergency tech companies are definitely frothy. So what he means by that is they're not necessarily in a bubble, but they are close to bubble territory. So sign number 2, prices are discounting unstable conditions and other unstable conditions in the market. So one way to measure this, are prices going up crazily high? Is there some weird activity in the markets? Are people over leveraged, etc.? And this can very well produce a correction. Something that we've noticed right here is Ray Dalio is saying that currently in today's market, there is no bubble and discounting unstable conditions. However, today's emerging technology is still pretty frothy. So that's something to keep in mind. And then sign number 3 is, are new buyers, entering the market without having the proper knowledge and the proper financial education. At Brotherhood Finance, we teach, savers are losers, the rich invest in assets. You need to invest your money into an asset vehicle because, like I was saying, in an average bank, you're going to yield about 0.0125% interest. It's going to take you about 48 years to earn 10% on your money, rather than if you put your money in a given asset, you'll increase your return on investment. And also, as we know, time is your best asset. So that's why here at Brotherhood Finance, we hope you find massive value. And again, please make sure to smash that thumbs up button if you've watched this far way through. I appreciate it as always. We provide massive amounts of financial education. And if you want further education, check us out at brotherhoodfinance.com. But again, sign number 3, are new buyers entering the market. So Robinhood, all these investing apps, crypto's been starting to bull. If you've not seen our video on that, check that out. We went over the metrics of all that and why I believe we're about to enter another bull market, and we're in a bull market for cryptocurrency. But new investors right now in the stock market is at an all-time high. People are leveraging. You got all these Robinhood. You got people that are getting into the market that really do not know how to invest, don't know how to calculate the value and look at those given PE ratios, and don't understand that when you buy a portion of a stock, you're buying a piece of that company and you have partial ownership, a very small percentile ownership of that company. Sign number 4 is there is a broad bullish sentiment. So if we look right here, Ray Dalio is saying that in today's total market, it's somewhat frothy. As always, it seems like the emerging tech is for sure in a bubble. So, and then sign number 5 is our purchases are being financed by high leverage. So leverage, obviously you're using debt. So it's, there's good debt and there's bad debt. So, bad debt can be a car or a house unless it's producing that cash flow. You're getting that cash flow. And then, good debt can be, investing in an asset such as, stocks or crypto, or you're running out, a multi-unit complex that's cash flowing as appreciation as a tax write-off. And you have tax benefits as well. So it's really important, especially at our age, to have that financial education and then accumulate assets at a young age and not accumulate liability. So obviously the more debt, the higher prices are going to go and the more people are going to be leveraged. So this also led to the housing market of 2008. And I personally believe we are in a bigger bubble than 08. And I think if we continue to print money, we're going to devalue the dollar and assets will probably go up. However, there's going to come a certain time here in the near future, I think that bubble will eventually pop. So, current conditions compared to previous bubbles, he is saying that today's total markets are somewhat frothy, and again, the emerging tech is in a bubble. So, this is just a cycle that continues to repeat itself with emerging tech that we've noticed. And, there is some somewhat frothy high leverage being used. People are borrowing lots of money, especially the U.S. They've been printing trillions and trillions of dollars to keep the market afloat. And that's why it's important to, have the right amount of financial education, because they've printed roughly about 22.5% of every U.S. dollar in the past 2 years. So when you're holding on to that money, you're actually devaluing your currency. So sign number 6 and last sign is our buyers and businesses have extended forward purchases. So are they buying more things? Are they noticing inflation? And are the prices of goods and services go up? And are they buying more to try to prevent that from occurring? And that's something we've noticed happen. We've had gas going up substantially. We've had price of goods and services going up substantially. So that's a very well-known metric. But in today's total market, he is saying that it's no bubble. And again, the emerging tech is somewhat frothy. So what can we gain from this video? Well, obviously we know, assets, liabilities. We know how to be able to decide if there's bubbles. And what is Ray Dalio saying? So if we look normal, it looks like a majority of the emerging technologies in these current market conditions are in a bubble. That is from, Ray Dalio's 6-sign indicator and what he believes is about to occur. So, that's just something to keep in mind is, it's very imperative that you invest in assets that you understand and you don't over leverage, your money, so you can have a good financial future and education and everything needed to succeed. So, obviously the last thing I want to look at is this is something that Ray Dalio also looks at. It's the USA aggregate bubble gauge percentile. So if you look right here at 2020, if you look at these previous market crashes, the tech bubble, so, we were at a very high level. And then if you look at 1929, this is also where we were at when we had the Great Depression that occurred. So we're not necessarily at those levels yet. However, we are starting to gain, in the bubble. So it looks like we are over about 80% already. So if we continue to have, more debt and use this metric, it looks like we could be entering another crash here in the near future. So, brothers, I hope you found massive value in this video as always. If you have any comments, anything like that, if you found massive value in it, smash the thumbs up button, leave a comment below. Check us out at brotherhoodfinance.com. I appreciate all the love and support. Again, thank you for 2K subscribers. It means a lot. Have a good rest of your day, a good rest of your week, and I appreciate it as always. Peace, brothers.